Thank you very much, and welcome once again to the EFF Special Edition podcast, which deals with the discussion documents towards the Third National People's Assembly, which will be held in Nazareth in the 12th to the 15th of December. My name is Tambo. I'm a member of the EFF Central Command team, and today we'll be discussing the perspective on the economy within the discussion documents, and I'm joined by two guests, Dr. Gumani Tshimomola and Duma Gqubule. Welcome very much to the EFF podcast.
Oh, thank you very much.
Thank you so much. Yeah.
Perfect. So we'll start with introductions because we don't want our people to think we're talking to our friends here. So it's important to get a background. Perhaps let's start with Dr. Gumani. Then we'll come with who's of course many of you will be familiar with. How are you? Nda.
No. What do you mean?
What do you mean?
No, thanks. And thanks for the
It's Rione, ne?
Rione.
Rione.
Yeah.
Sure.
No, thanks for the invitation. Like you said, in the EFF space.
Yeah,
I don't have to introduce myself that much, but I'm Gumani. I'm responsible for research, both in Parliament and in the organization, broadly. And I'm also responsible lately for coordination of governance task unit work, governance task unit GTU, where we oversee the participation of the EFF in municipal council, all of them where we have representation, provincial legislatures, all 9 of them, and in parliament. So that's pretty much what I do in the organization. Yeah.
Academically, we call you doctor. Why do we do so?
Well, academically, I did some research project at VET. I mean, it's a doctoral thesis project. I looked at the role of the National Treasury in South Africa's political economy, just to understand the institution behind formulating pretty much what we're going to be discussing here. And it's in the VET's website as a PhD thesis. I went to Stellenbosch, did an undergrad there some time back. I went to Tuks, did an honors degree. Did a master's degree at Sussex University in the early 2010-11. And then I ended up doing the PhD academically, that's it. I've worked at the Treasury for about 5 years before I went to some research outfit there associated with FEDS at some point before coming to the EFF as a researcher.
Duma?
Yeah.
Hope you're not intimidated.
Yeah. It is intimidating. The short version, my formative years were in KZN, and I went to school in Eswatini at the age of 11.
Is it?
Yeah, and it was a school where there were people from about 50 countries plus, and most of them from other African countries. And so I became a Pan-Africanist at an early age. So I decided that I'm African before everything else. After that, I was detained, under Apartheid, and it was 2 treason trials as a teenager, 3 times in detention, 2 treason trials, and then I left to the UK. I wasn't in exile because I left officially by plane, and I went to study.
So plane discounts exile.
Well, I didn't come back to South Africa at the time. So when I used to meet my parents, I'd meet them in what was called the frontline states, with really amazing holidays like in Swaziland, Botswana, and so forth. And then I studied economics in Aberdeen University, and then I came back to South Africa, at the dawn of our democracy, and I worked in the media as a journalist initially, and I think my career took a bit of a change. I really enjoyed the time in the media. Is when I worked for the BE Commission under Cyril Ramaphosa. And and so, I don't know, I've worked in many, policy issues. I got to know the EFF when they were still in the ANC.
Yeah.
And
how so?
I was hired by the South African Mining Development Association to do research on nationalization. And to be quite honest, when I started, I was approached to do this project by Eric Mieni. I had no view. I just thought mining is a sunset industry. And the more I dug into the issues, I discovered that it wasn't like that. So I came to eventually through a research process that, no, we must own our minerals. The minerals belong to the people of South Africa. not the companies that mine them, without getting technical. That's what I came to the conclusion. And there were people in the ANC who were listening to me, and the EFF was one of them. I presented to the ANC Youth League, and I saw...
The conference?
No. There was a meeting where they were invited. I was invited to present,
Okay.
The national executive,
Oh, yeah.
Yes, and then on a lighter note, I was invited to an extended ANC PEC at the time in Free State. It was chaired by ACE, and I was invited by the Youth League, And then I explained everything I said. Then I met this comrade from the Youth League in Melrose Arch, and I said, what happened to that debate, nationalization? He says, hey, Comrade Duma, when you left, they used your arguments to argue against nationalization, but we didn't have the tools to respond, so because I could have been there to answer. But anyway, so I was like, to cut a long story short, I've done a lot of work on mining, and then as the economic crisis accelerated, like after 2015, 2016, I started getting involved in economic policy issues. I'm actually quite tired of them now because, and then during the pandemic, there's a turning point in some of my views. So as we're approaching towards the pandemic, during the crisis, I was agnostic, about the two great causes at the time on the progressives is the universal basic income and the job guarantee. So I was agnostic as to one or the other. But when the pandemic came, we're sitting in a meeting there's a meeting online Zoom in the presidency with researchers, and everybody's trying to make their proposals smaller. And I think I talked to my colleague at the Social Policy Initiative, Isabel Fry, and I said, this is really strange. Everyone in the world is saying whatever it takes. Whatever it takes, we must do it, And there was an unprecedented coordinated response to the pandemic. It was a coordinated monetary and fiscal policy response. And there was huge, what we call helicopter drops of money given to people, and cash. So I became part of the campaign for a universal basic income. I think we fought a very successful campaign for universal basic income. And to be honest, I saw it a little bit in the economic session. The campaign doesn't use the word basic income grant anymore. We use universal basic income. But lately, I feel like we've kind of won that debate in the public. And I've now talked about Vision 2035, and I present to many South Africans, it's a plan to achieve full employment. And so
by what year?
By 2035, So each time we don't do what we are, like this year, I'll have to update it, so it's 2036, But so I do think that we have to be very explicit about the need to achieve full employment, Thank you so much.
I didn't know about your background in mining. It's quite an interesting...
for a long time, so now I know I did work for Mistra. I did case studies. Russia, when you see Putin, I even know what's going on there. Russia, South America, Venezuela. For many years, I was obsessed with it. And I worked with mining, what's it called? Mining Pagisa in the presidency under Zuma. And one thing that really disappointed me, I got there every single African country. I used to know every single mine, every single country in Africa, And when I got to this meeting, McKinsey was running the show. And I said, does McKinsey know more than I do? On a lighter note. But now, like with the Stilfontein.
I wanted to aask about that. What are your thoughts with that?
I'm still forming, because, like I was saying to someone, it's like watching a soap opera. You don't watch the soap opera for 3 years, like me, in mining. But now people the artisanal miners have called me to a press conference tomorrow.
Stilfontein?
Because these are people I used to work with, They used to invite me to the alternative mining in Daba. So they've called me, and I've been speaking to them on the ground about that issue. And so I've been speaking to them, people like Mishak Mbangula, Chris Rutledge, and Wakua as well. And so I'm quite familiar with the issues. I did a study as well from Action Aid, and about African mining. So it was, and the last thing before on mining, because that's not why we're here.
Not the last one. But
On mining.
I'm curious about your view on something.
Yeah, before we get there, is that what I discovered there is that outside of the Anglo-Saxon world, the US, Canada, Australia, state ownership is the norm.
Yeah.
Yeah, it's the norm. Yeah, and So that's the one. Yeah. So, and I remember I did a presentation once about my state ownership ideas in I think it was in Melville in a restaurant, and Andile Mlutano says, "Okay, I agree with you, but not this ANC government." So I think eventually people agree with me. I remember I was with the CEO of Coca-Cola. He says, "I agree with you, but not when Julius and Jim say so." Yeah.
Telling. So I wanted to check, in your experience, because I'm seeing there's a lot of reports now that, and something I think we've made an argument with as well in the EFF, Doctor, that these illegal miners, where would they take this gold after they mine it? And I think I saw a news report recently there's actually credence to them selling it to mining companies with licenses. Is there like some type of relationship
so now
there?
When I did the study for on Africa, we looked at illegal artisanal mining throughout the continent, and I was just looking before I came here as to, in Sudan, I think most of the mining is artisanal. The majority of mining is artisanal, and then in DRC it's very big, and so there's different. But to cut a long story short, is that this mine that is just closed down. I'm actually still doing research. I don't have a view. It seems like the last owner was Harmony. I'm not sure. Buffelsfontein, and I was trying to get to the annual reports. They left a lot of gold there. So I think they left a lot of gold, And there's a mining development fund. So in my view, the people, you must regulate it, The people must be able to use low tech. The corporate structures can't mine it, so we must do low tech. And in terms of the buyers, the model internationally is to have a state buyer, and so that you cut out the criminals, And like there's certain ones like in chrome, people know that the buyers are like from China. That's what's known in the industry, and so I think from what I remember, the dynamics in each commodity are different.
Oh, yeah.
Yeah, so in gold, in chrome, and whatever, so the dynamics are not the same as to the buyers. So I'm not sure who the buyers are for the gold, Yeah.
Interesting. No, that's fine. So I think perhaps before we delve into the discussion document itself, I think, Doctor, if perhaps you could, and also it's not a conversation between me and the two of you. You also can interact. I don't want you to feel constricted. Perhaps give us a brief geography of the history of how the economy in South Africa was sort of established, particularly during the colonial and apartheid period. Like what informed how the economy is structured today? What philosophical influences? What motives informed it? Because, of course, we know there was the idea of expansion from Cape to Cairo by the roads and the mining industrial complex. I've had conversations with you about the role of railway that many people don't necessarily reflect on, the role of railway in the expansion of colonial conquest and, of course, the establishment of the South African economy. But perhaps give us that brief background historically before we delve into current diagnosis. I'll start with you, Doctor, and perhaps, of course, you can chip in as you see fit.
Look, but just before we get to that, I think there's an interesting point that you make. So outside where the market are very dominant, right? They describe a certain number of countries where state ownership is quite a norm, right? But what you find in academia in South Africa is that at some point during the sanctions, those sanctions, we understood them to be economic sanctions.
Yeah.
So in other words, there's certain things that you couldn't move around, certain trades you couldn't make, which led to almost like clandestine underground economy that was moving certain commodities. The emergence of the need to process our own coal into fuel, the emergence of Sasol, for example. But interestingly enough, those sanctions also applied to academia. So if you look at the pattern of academic output in South Africa, particularly from the early 1990s, it's very stale. Even the kind of arguments that are mostly made in economics, political economy, geography, they are almost like way behind compared to other much more robust academic outputs that you find all over the world. That is why even the conversation about state ownership, it's everywhere else you go, even where there's dominance of private sector, it's not frowned upon when you talk about state ownership. The conversation become, okay, how best to manage the dynamics between what the role of the state is, where does it end, and therefore where does
so the
private sector
sanctions
start to participate?
stunted policy development.
Quite a lot, and we don't talk about it more often. If you go to the UK currently, the biggest issue in electricity space, for example, is that people can't afford electricity. And the conversation is about nationalizing back the generation and distribution capacity into the state. They have enough academic outfit that are robust enough to then could give different perspectives. But in South Africa, we don't. And then we can talk about that maybe some other time, Commissioners, now, when we're not discussing the discussion documents. But just to go back to the history of South African, it's not South African economy, South African political economy, and contextualize it. So the formation of the union, the discussion that starts in the late 1800s, early 1900s, emerges centrally because the description that it's used in historical documentation is that the railway system is retarded, meaning that it's not smooth in operation. So the cost of moving certain minerals from different parts, at that time, all of them were going to the ports. It's not synchronized, which makes it difficult to run the business, but equally difficult to get the minerals out because the focus was on how do we get all these minerals that were discovered out of South Africa to Europe, right? Now, the conversation become, we need a synchronized system. But you can't have a synchronized system when Natal colony, Cape colony, the Orange Free State colony, and Transvaal were independent, right? Then those who were pushing for amalgamation of the colonies, mining interest in the main. And at that time, the financial sector was pretty much primitive because most of the funding that was invested in mining was coming from Europe, particularly Britain, because they had colonized South Africa at the time. So you find the need to consolidate the railway system at its primitive stage, but being developed to become one synchronized system. And that leads to the formation of the Union of South Africa. That's one historical point which is often overlooked. You know, we tend to think that colonization was just comfortable around coming together, different wars, different parts of land. But essentially, the key issue was how do we build an economy around extracting these minerals, but have an efficient railway system. So railway became a very contentious issue, right, in this way. So at the beginning of the formation of the state get formed essentially in 1910. But the act itself, the South African Act, it's 1909, right? It gives the Minister of Finance and how you manage the fiscus certain responsibilities. But at the same time, there's the railway and harbors. That is a very dominant sector. It has clear interest. The interests are, we synchronize the system. It becomes one efficient system, but we need to expand it. So meaning that whatever money you allocate from the state and all the concessions that you enter into with the private sector needs to be such that you expand this as fast as possible and then move out as many minerals as possible. That becomes the foundation of the South African economy. That is why today, if you were to follow it in a map, topographically, you find that towns are next to train stations, right? So that becomes the geographical development of South Africa. So where you find a train station, there will be a town, and then the council
town will focus on certain exporting.
But all in support of mine, a break, and then the port.
Where I stay, actually, funny enough, there's a town called Dispatch in Quebec. There's a railway there. It used to manufacture bricks. So it's called a dispatch because they were dispatching bricks using that railway. So
you'll find that those bricks are in support of some form of minerals and mining. You know, and then what happened over time is that we build these towns around this railway network, right? Even the expansion of a railway in Africa, if you follow it, it's minerals, towns that emerges out of these train movements, and then to the port. So you find that all these railway end up in some coastal town. And you bring goods through those towns and then you take out minerals. So that has shaped South Africa's economy. And as a result of that, you find that Durban, some parts of the Eastern Cape, some in Mpumalanga. The railway in Mpumalanga is quite a lot, and it's between mines and power stations, moving of coal. And then outside that, you then come to Johannesburg, which is a special case, although it was founded on minerals. So you have had a long period where the railway and harbour played a far much greater role in shaping the economy. It became the focus, to a point where even when the first Minister of Finance, Charles Hull, when he was given the portfolio, 2 years into it, he says, no, I'm resigning. And they said, why? But okay, you say I must prepare the budget for South Africa as a whole, this colony of Britain, but we don't know how much we're spending on rail and harbour. The Minister of Rail and Harbour behaves as if he's a state within the state.
Yeah.
And the Prime Minister, you allow him to do that. It was both at the time. So what's the point of having 30% of the entire budget outside the preview of the National Treasury? And I can tell you, for the longest time, the National Treasury never won that battle. Up until maybe the 1970s, where they began to get a stronghold into both the economic policy formulation, but at the same time, complete control of the character and formation of South African economy. So when you trace South African economy from the late 1800s, you find that everything evolved around mining, harbour, and rail comes into play as the big state role, right? To a point where even when we had to deal with the issue of white poor problem, there was a time when there were a lot of white poor, particularly Afrikaners. The solution came from rail and harbour. So employ as many people as possible in your expanding of railway network so that we deal with this problem of poverty. And then you get to some transformation of the economy probably after 1950-60, where after the World War II, most governments all over the world began to play a greater role because there wasn't money in the private sector. But private sector was not willing to rebuild the world after the World War II. We call it World War II, but it was particularly in Europe. But in their mind, they're the world. So you find a situation where the state play a bigger role from 1940s up until 1970s, when there's a pushback from what we today describe as the neoliberal forces. And at the time, you also have the problem of oil crisis in the late 60s, early 1970s. And that began to reshape at a policy level before even you felt it day-to-day activities of the economy. So it changes from now influential mining and rail, and then you begin to find finance coming into play. Finance meaning investors, stocks, pensions, banks. And when they come into play, in South Africa, we then have this link where we move away from a mining energy complex, where the entire economy had to support energy so that the mine can operate, and then you extract minerals. And then now you move into a space where the finance become some component. In the late 1990s, it was just not more than 13%. And then it becomes a bigger portion, more so after 1994, where we talk about how the economy was swapped from manufacturing and mining, where manufacturing accounted for more than 23%, textile mostly. There were some electronics, but not that much. It was heavily on textile. And then now you move into this space where now the finance sector becomes now the leading sector, not only on the contribution to the GDP, but even on how we think about policy. And that's where the National Treasury now becomes even more influential. So you see from the mid-1980s, after some debt crisis which we had at the time, the Treasury is at the forefront of solving that problem. And then from there, they just sit on top of economic formulation. And the ANC stood no chance because they have not been doing work around economic policy formulation.
Yeah.
So that's pretty much the history. So even in terms of employment, people move from mining, agriculture, and manufacturing in the pre-1994 period. And then post-1994, you start finding government services increasing. You start finding retail services and then the financial sector. So we swapped from a very productive highly industrialized, obviously for the benefit and the exclusion of white people, where black people were just cheap labor, to now this financialized economy. And that's pretty much South African economy in a nutshell, but centered around mining, rail and harbour, and over time, the encroachment of finance and what it is today.
Yeah. Perhaps since you have experience in mining, Comrade Duma, is there any insight you can give us on which specific mineral perhaps was at the core of this
I just want to
process?
ask him a question,
Yeah,
Dr. G, a question. You know, as you were telling us about the formation of the union, I didn't know that history, but I remember reading, Dr. G, that Cecil John Rhodes wanted to run the whole of Southern Africa as one unit, you know. It was an inconvenience to the colonialists to have all these different countries.
Yeah, I mean, it goes back to the same point. So South Africa at the time was a representation of what was happening throughout the continent, because, I mean, it goes back to the conference in Berlin, which decided to slice up the continent and put these borders. So Cecil John Rhodes, being influential in the southern tip of Africa, he was at the forefront of identifying that retardness of the railway system. And if you look at the building of the railway from Cape to Musina, and with an attempt to expand it to Zimbabwe, then Rhodesia, you can see that the intention was we need to have one synchronized system, and purposefully for extraction and then to the mines. So that characterization of the problem that they faced at the time in South Africa, you will find it in the southern part mostly. It may have been different if you go to, for example, West Africa. But there was the same problem that the extraction at some point, even of labor itself, was a problem, because you have these small bits and pieces of systems that, because of slicing up of the continent, were not working. And therefore, if you can do it in the southern tip, amalgamate these colonies, make them one, and then move upwards, then it will make sense. But the conceptualization essentially was the same, because the problem is the same, and the solution that was envisaged was the same.
So the short version now, he's got me thinking about things I'd even forgotten about, you know. But my lens is kind of different, because I look at the companies, you know, because I was looking at the history of the companies. So obviously it started with diamonds, and there was a diggers' democracy in the Northern Cape, you know, what we now call this. And then it's centralized eventually around a company called De Beers. And there was a mighty fight for De Beers, I think that in 1926, you know, and it was finally consolidated as one, I think, with Anglo. So anyway, so we had the 7 mining companies, mining houses were formed, and goldfields, I think 1880s to Anglo-American, the last one in 1934. So now these 7, they became mining houses. And in terms of the historical record, I read quite a lot about Saint-Peter Blanche, and Anglo was the last to enter the field, but they became the largest. Now, there's one event that I found quite interesting, was in the wake of the Great Depression in the early 30s, there was a system before then called the gold standard. So the gold standard collapsed, you know.
Because they ran out of gold.
No. It just was, it didn't allow them, for whatever reasons, it just collapsed. So the US exited the gold standard. So they had a modified version of the gold standard until 1971. So, but for South Africa, it's big. So there was a big depreciation. Those two things, December 1932, there was a big depreciation of the South African pound. And then secondly, the US, they exited, I think, in 1934, January. And then that, the price of gold, so we also had they were buying gold at $20, I think, if I remember. Now they would buy it at $35. So you had this double boost to the industry. So I think Sampi talks about it in his book, about how this windfall from this massive depreciation is what powered South African industry from the 1930s to the 70s. And the formation of the IDC, the formation of all the institutions in the mineral energy complex, you know. So the surplus was invested into. So I found that very interesting, and the economy kind of grew by 4.5% from the 30s, from 1933 to 1973. So that's the first part I found interesting. And then as we approach, so Anglo becomes huge. As we approach the late 80s, the industry, what I would like to bring attention to is excessive concentration of this economy. So there are now 5 mining companies after all the mergers that have happened between them, buying each other out. And then there's about what they called, I think, to 7 axes of capital. So the 5 mining companies own 70% of mineral production. And then these 7 so the mining companies diversified into industry and into finance. So now there are these 7 companies that own most of the South African economy. So by 1994, you have these 7 companies, Anglo, 43% of the JSE. That is incredible, yeah. So you have Remgro, number 2, if I remember well. Then it was Sanlam.
Remgro is Rupert.
Rupert, yes. And then number 3, I think, was Sanlam. And then number 4 was Old Mutual, then Liberty, and then Anglophile, which became, African Rainbow Minerals, later on. So I'm just saying, so those 7 companies, I think, they owned 87% of the JSE. Now, this is very important as we go today, because although there was restructuring of those conglomerates in the 90s, after the post-apartheid, they were just consolidated in a different way within their sectors. So Anglo, even today, is still a big part of the South African mining. It's no longer in industry, it's no longer in finance. So it's very important as we talk about unemployment problem, is that there's Kate Phillips, works in the president. She brought attention to this, this excessive concentration. We've got when I tell people that the world unemployment rate is 5%, they say maybe they're not measuring, we measure correct, they don't. I say, no, that's not the case. The difference with other developing countries is we've got a low level of informalization. It's 17%. Because the typical routes out of unemployment in developing countries is the informal sector and agriculture. But if you look in South Africa, this monopolized industry, there's big agriculture, there's big retail, so it shuts out, opportunities for the smaller things. Yeah. So when we're looking at case studies for the universal basic income in Kenya, it had huge multiplier effects in the local economy and in Tanzania because you don't have that structure. In Kenya, there used to be this company called Nakumatt, owned by one family, but now I think it's collapsed now. So I'm just saying that, so when we look at, in the typical developing country, you've got a much larger informal sector that employs people. Maybe the quality of work is not great, but that is the issue that we haven't addressed in terms of the excessive concentration of this economy post-94. Yeah.
So monopoly in South Africa essentially
it's excessive,
breeds unemployment.
Yeah, it's one of the reasons. It's a structure I believe it's first a demand issue, then it's a structural issue. Yeah. So there are no opportunities, for people, and it pains me because she actually looked at what does a poor person buy, and you look at they buy coffee, it's Nestle. What do they buy? This and this and this. She looks at the typical food basket of the people, and it's produced by large global companies and South African conglomerates, Tiger Brands and so forth. So that kind of route out of unemployment doesn't exist in this country. And I've been looking that we've seems to have exported this structure to our region. It's a new area I'm working on because if you look at the top number 15 highest unemployment rate in the world, according to the ILO. Number 1 is Eswatini. Number 2 is South Africa. And all the Southern African countries are in the top 15. And then I'm starting to look at the data that we're seeing. Are we exporting this unemployment rate? I was shocked to discover that Botswana, after all the growth that they've seen, they are high unemployment rate. I think it's about 33 or 34% unemployment rate in Botswana, which is unacceptable. It's
crazy. No, on this question of monopoly, and when you raise Sanlam, your Remgro, what comes to mind is Avbob, just a large-scale establishment by the Broederbond during the apartheid era, of entities that sort of perhaps precipitated the racialization of the economy to the hands of Afrikaners. And I think perhaps that can be the segue we can use to have a conversation around the diagnosis of how racialized our economy is today. What were the foundations, Dr. Gumani, of how perhaps state-owned entities, but also how the apartheid government utilized state-owned entities to racialize our economy, but also certain sectors of industry and certain entities to perpetuate the monopoly that Duma is talking about, like the establishment of your Sanlams, the establishment of your Naspers, the establishment of your those sorts of entities. How critical was the Broederbond rather in the racialization of the South African economy, particularly at a legislative level, and how is that sort of permeated to post-94 and the diagnosis that I think then we can also enter into a conversation of what are the indicators of how racialized our economy is today?
Yeah. So, I mean, I think Duma makes an important point, right, on the characterization of unemployment in South Africa and in the Southern Africa. But unemployment serves dual roles, and we must appreciate this. And we're not talking about it enough. So if you have 10 people who have same skill set, same qualification, same background, and they're all unemployed, and then you are a company that deals with metallurgy. These are people who went to TUT, study metallurgy, they have a diploma, BTech, and they have some experience, all same level. And then you come and says, no, I'm willing to employ two of you, 10 rand per hour. So there will be two people who will say, I may be entitled to more because of international standards of how much we get paid, the experience and everything. But because of high level of unemployment, I'll take this 10 rand per hour, right? So it means that not only does unemployment has other manifestation, but on the balance sheet of these companies, when they look at the cost of labor, we are likely to be one of the cheapest areas where you can conduct business, right? Not even in an exploitative way, but I'm just saying that because there's so much unemployment and there are many people who are just desperate. People are willing to take whatever is being offered in the job market.
Yeah.
So that's why you have underpaid people who are professionals in many industries. There aren't any industry that you can say people are relatively compensated in terms of international standards. Maybe when you move into the finance sector, because those ones are pushing more or less the same papers globally, and they all operate like satellite offices of the same asset management companies, your BlackRock and all these auditing firms, Deloitte. If they do corruption, if you read from China all the way, China they won't try it actually, very little of it. But if you move South America, Europe, and Africa, and some parts of Asia, the kind of corruption they do is the same. So I think that's an important point. But looking at the role of SOEs and how racialized South African economy is. So I once did a tweet lately. I stumbled upon a book. I borrowed it a friend. So what that book does, it shows in the late 80s, 1989, I think. That tweet, I think, is still pinned there on my Twitter profile. So what that book does, it shows you every state-owned company, what it produced,
I saw it,
and how many people were employed in it. And if you just go through that book, you realize that the apartheid state between the late 1940s when the National Party took over up until when they lost power, it went on a rampage of spending so much money that they were able to build, out of fear that they're being excluded, obviously, from participating in the global economy. But they were able to build almost every sector from the state inside. So when you start a private company, you were leveraging on an existing state-owned company. So you were not starting a new product out of innovation. You were saying, okay, the state can produce tar to build roads, but they can't produce the special oil that is used to bond the tar. Then you go into that space, right? But also remember there was the IDC. So the IDC was designed, it's in the name, Industrial Development Corporation. It was designed purposefully to support the expansion of industries. And all these industries, those companies, when you check who are the major shareholders, either it will say specifically the state or the IDC. And at the time, the state and the IDC were one and the same thing, right? But okay, then why do you create this capacity? Number of problems. One, major unemployment amongst the Afrikaners. They were trying to resolve that. It didn't take long, by the way, to resolve it. Once they identified it and said, we're going to use rail and harbour and the state capacity, then we're going to have unemployment resolved. Poverty amongst white people. And they did. It must have been about 3 or 4 years or so. But the other thing that it did is that you have to expand society. So where you find life in South Africa, where there are communities, the state has to deliberately expand activities in those places. Obviously, there will be offspring. Mining was a big one.
Yeah.
So we were building things around mining. But the Afrikaners came with agriculture, you know. So then they invested quite a lot in agriculture. The establishment of one of the major banks was around agriculture, you know. So what you find is that it's not so much a deliberate...
scarcity.
Yeah.
Full scarcity.
Yeah. So it's not so much a deliberate racialization. The economy in its totality is racialized. From as early as the formation of the Union of South Africa up until today, the racialization is by almost an organic manifestation of we own industries that are key. And when you collapse the state in the early 1990s, many of the companies, if you read Henny van Veeren book, Guns, Politics and Money or something like that, he speaks about how companies were stolen. State-owned companies they just disappeared from the state balance sheet. One of them, people will not even think about it. That thing we always complain about it, how it lands, the Flies Affair.
Oh, yes.
That thing was a state-owned company at some point.
Are you serious?
Yeah. And then it just disappeared from the balance sheet because...
And reemerges as a private
it
company.
reemerges as a private company with legitimacy and reasonable funding, including funding from overseas, in breach of licensing requirements for the aviation industry. So the outcome of a very racialized economy, both by stealing state assets during the transition when people were not accounting for them, same way the land disappeared from state deeds book to now belong to people who sometimes can't even give you a title deed.
Yeah.
So that's how you end up with this racialized economy. And post 1994 is correct. So there wasn't a transformation of the ownership in the JSE. There was the reorganization. And part of what academia doesn't deal with in South Africa, which I said the problem earlier on, everywhere else in the world where you go and engage with progressive scholars around political economy, geography, David Harvey, for example, in the US, we talk about continuities. So there aren't many things that start from scratch, including inequality and racialization. They all are just continuities of many of these manifestations, including racialized economy. So the racialized economy you find today, where the JSE, he has very interesting background on it. He's written quite a lot to Duma. I asked him, when we were discussing the discussion document, say, can you please send me that presentation? There's this attempt to try and inflate the ownership of black people in the JSE, right?
Yes.
And then when he defeats them with numbers to say, no, actually, it's not that much. In fact, he argues that it may even be below 1%, right? If you look at the technicalities, he says, no, but the PIC has invested everywhere, and the PIC is mostly owned by government employees who are black. But the reality is that, first of all, when you are a government employee and they take your pension, they don't wait for your consent. They say they're doing it for your betterment in future, so that when you at least retire, you have something, right? And one day we should have a discussion about the role of pensions in society. Because it's pretty much a financialized product that serves to give those who have capacity to invest now, invest, get very high returns. But you as an employee, as a worker, at the end of your work life, you get very menial remuneration compared to what your money did in investing in these companies in the JSE and all over the world. Because now they're allowed to even go and invest somewhere else. So the characterization of state-owned companies, how they were used to expand life in South Africa for white people, and then later on when the ANC took power, they just allowed the disappearance of those state-owned companies because they should have been the offspring of how you build a new kind of economy that integrates everyone else, right? But that didn't happen. So as a result, you find that the JSE, number one, black people don't own much of it, right? It doesn't matter whether you look at his numbers or you look at what the JSE is saying 30 years into the democracy. Or the National Treasury tried a study in 2016. It was embarrassing. They were almost wanting to keep us quiet when they released the study, right? Because we're raising the issue in Parliament to say, who owned the JSE? You know? So you have that situation where when you look at the JSE, it's the same thing. When you look at the transformation charters across sectors, right? None of them have achieved their objectives. None of them. And you won't even expect agriculture to be the worst one, but it is. It has achieved the least transformation in the past 30 years, including when we started doing the transformation the way we do it. BEE, there's a strong empirical argument to demonstrate that we are now going back. Many of these companies are not doing BEE the way they were doing them before in the late 90s, early 2000s. They don't see the need for it now because the conditions allowed them to continue without any of this. If you saw Transnet recently, says that they're not going to require certain B requirements for companies to do, work with them. So when you look at unemployment, you have about 11 point something million people who are unemployed. Majority of those people are black people.
Yes.
When you look at white people, it's under a million. Last time I checked, it was 870 something. It's in the discussion document there. We can argue that their numbers are small as a population, but proportionally, the number of unemployed white people, followed by Indians and then colored, you can see that there is no proportionality that represent an equal society. If you go to the kind of education we get, if you go to the kind of events that happen,
life expectancy,
white people are sitting comfortably at some serious numbers of you can live up until your 70s. Whereas if you're a black male, I argue 50, you are lucky, but stats say 67, 68. So if you go to access to health, which then inform life expectancy, you then can see that actually black people are dying in some instances because they have no access to primary health care. But later on, when these diseases are serious, you don't have money for it. And if you go to a public hospital, you're going to die. It doesn't matter which sector you look at. South Africa exists where we continue with the apartheid character of the economy, and white people continue to earn and control most of what we have. And that it's founded on land ownership because they still own pretty much of the land. So
I'm interested in Duma's this presentation of yours you're talking about the JSE, because the JSE is used to gag us.
Yes, it's okay.
In many instances.
So I just want to finish the one on mining. So in my research, I also came up with the issue of the sovereign wealth fund and how it would work. And, if I have to say the first criticism of your I didn't read the whole thing, but the sections that I wrote, is that the EFF brought this issue of mining and state ownership to the national discourse. I think you've kind of left it a bit quiet there in the discussion documents. And you, as the ones who brought up this debate, that is why I was commissioned to do this research, because you brought up this debate. And but anyway, so I just think that it should be a bit stronger there. And the president sits in parliament and he says black people own, I think it was 30% of the mines, 35% of the mines. Hevana. So the BBC, the Black Business Council, asked me to do a study of it. And obviously I came up with the real numbers of black ownership. But I just want to say one thing is that in terms of, just to finish the one on state ownership, the PIC owns, according to my statistics, about 25% of the value of South African mining assets. So I propose that PIC, I'll explain one day later, must cede those assets, PIC and IDC, to the Sovereign Wealth Fund. And then day one, we own 25% state ownership. No money changing hands. That's number one. When you saw this debate between Anglo and BHP, which I followed very closely, guess who's the biggest shareholder in Anglo? It's the PIC. So I'm thinking, and then I phone the Minister of Mines, I phone the chairman of the PIC. They were taking the government stance was neutral. We don't care which way it goes, this merger. But that opportunity of that merger was an opportunity for Anglo to come back home, in my view. But we won't really go into it. So I'm just saying that then you put the black ownership, according to my calculation, it's about, what was the number? It was like 5.6%? No, it's 8% black ownership. So the black ownership is consolidated around three companies, African Rainbow Minerals, Exxaro, and Kumba Iron Ore. So Exxaro owns 20% of Kumba Iron Ore, so there's some double counting there. So what I'm trying to say is that if you add the 25%, plus the 8%, we're already at 33%. You consolidate that. Now, what we should be doing is that I said that the royalties, 40% must go to the state mining, the sovereign wealth fund to finance it, that it can buy more shares. And then the 50% must go to community development trusts. We would not be seeing what we're seeing now in Kuma, what we saw in Marikana. And I just feel that, I shouldn't belabor this point. EFF, that's what they brought to the country. And you must emphasize it.
Definitely,
It kind of got
definitely,
lost in the
definitely,
discussion document.
definitely.
And so I
That's
say,
the point.
yeah.
Yeah.
So I say that 33. So I put a target of 51% domestic ownership. And then the domestic ownership starts with Anglo coming back home. So now with this merger thing, it has huge implications for minerals in Southern Africa in the sense that Anglo and they wanted to exit De Beers. So I'm just saying that this is an opportunity for Anglo to come back home, but we must have a view as South Africans as to how we see this panning out here.
Yeah. No, man, that's interesting. We'll take note of this.
No. Sorry, that's the
critique,
first thing
it's
that
important.
Kanjani,
It's very important. You must understand we are dealing with a lot at once.
I know there's too many issues. Yeah.
But definitely. Let's talk about financialization. So, over the past couple of, maybe the past 3 decades, there's been a lot of arguments around the deindustrialization of the South African economy. And of course, it being centered around the finance sector primarily, and how this has affected the poor, how this has affected the cost of the food basket, and all sorts of things. And of course, we also make the argument around the necessity to nationalize the South African Reserve Bank to sort of counter the concept of financialization of the economy, the role of the financial sector, and maximizing profits at the expense of consumers. They decreased the repo rate, I think, 2 months ago. I see they're proposing another decrease. I think they're doing some incremental decreases, but Dr. Gumani cries a lot about monetary policy.
And fiscal policy.
Yes. But I think for the interest of our viewers, because we speak about it in the economic perspective, can you define what is financialization, how it operates, the impact it has on the ordinary people, so that they're not misled by these constant repo rate cuts that the GNU claims victory for?
Yeah, no, absolutely.
Yeah.
You know, interesting enough, I think you're being... I don't want to say restrained.
Yeah.
But one time when I was in East London, coming back doing election work, he calls me after reading the manifesto.
The manifesto.
Yeah. And the criticism was layered. You raise this issue, it's in the public discourse, you say
then you
nothing
leave
about
it alone.
Yeah, and part of the problem, I think, internally is that in the past 10 years, for example, you may remember that Parliament did serious public hearings around transformation of the financial sector.
Yeah.
We pushed for that.
Yeah.
The Sovereign Wealth Fund, the former Minister of Finance who passed away, Tito Mboweni, may his soul rest in peace, he announced it in the budget speech that we are going to form a Sovereign Wealth Fund and we'll then deal with modalities. All right? That was like 3-4 years ago. But in the same budget speech, he says that I have tasked the Deputy Minister of Finance, Dr. David Masondo, to go and finalize how do we bring about a state bank.
Yeah.
You know, and I think the criticism
And the
mining,
Sovereign Wealth Fund. Yeah.
Sovereign Wealth Fund, and I think the criticism on state mining, I think that's fair. That's fair. But I mean, coming to the concept of financialization, so it has layers, right? There's a much simpler interpretation, but it then gradually increases to become extremely sophisticated and complex concept, to then break it down into small pieces. But at a much more practical level. So when you financialize your society, everything operates around the sector itself, finance sector. But when you understand its structure in terms of hierarchy, who gets to put in what and what they get back. In the world, if you think about it, those who have capacity to make financial investments mean you have more money than you need at the moment, you are willing to seed some away, you can call it savings, right? You can save some money, you can give investors some of that money to go and play around globally in stock exchange. You have companies that specializes in that. We call them asset management companies.
Yeah.
So the number of those that can invest, it's very small. You know, it's the 10% we talk about, right? So it means when you financialize your society, it means all decisions that you make in how you form and shape society, how you formulate economic policy, how you build a sovereign protection around yourself, in how you protect yourself as a nation and your economy, defense capabilities, how you deal with unemployment, all those things. First and foremost, the question that you answer, how do we return the investment that was made by this group, the 10%, right? So everything else is centered around, first and foremost, how do you return the investment that was made by this 10%? And then the rest shall follow. So if you were to think about financialization of society, without getting into the nitty-gritties of modalities of these assets in this group, this is how they move around. But that's the first thing you need to understand. But how it manifests in everyday life. Take Marikana, for example.
Yeah.
If you remember well, the workers, how they said, no, this is enough, right? You pay me 10,000, right? But of this 10,000, I took a loan with Capitec. They call them recurring loans on a month-to-month basis. I took a loan of 5,000. So the first thing that happened when I get paid is Capitec will take their 5,000, right? And then that loan has interest rate of 500. So it means that the interest rate of 500 is eating on your 10,000. Remember, because they're giving you that loan every month, it means that 500 becomes 1,000.
Yeah.
Over time, they were saying that even if I get paid today, Capitec just take everything back, even more than what I can afford. That's how we begin to characterize Capitec as a loan shark.
Yeah.
Because their practices of lending at the time
Yeah.
was very problematic, parasitic almost to describe them, right? But so that's what you have. So you have the entire society that is subjected to financial instruments to their detriment, but at the benefit of the very few at the top who are willing to move around what they call their investment portfolios, which almost in its totality, it's an element of financialization. But then there's a much more sophisticated characterization of financialization of society. So this is where now you bring Marxism in, right? David Harvey speaks about when capital starts to operate at a level where money buys more money. So you no longer have to invest in productive sector because that is much more complicated, right? You just need to invest your capital into capital instruments, which then brings you the return without having to go outside the finance sector. And how does this manifest itself? So look at the housing crisis in America. So the housing crisis in America is what manifests itself as a highly financialized society. So people were buying debt portfolios. You borrow money, you can't afford to pay it, but someone says, okay, if I can push you to pay it, I'll make more money than I put in as an investment. So you end up trading amongst yourself, but you are trading financial instruments. And you are not putting money on productive activities. You're not building factories. You're not producing cars. You're not producing textile. Simple things that we use, because now you're all concerned about buying financial instruments because those financial instruments on their own are now commodities.
Yeah.
And they can be traded. That's what we talk about financialization in scales. From the simplest form of recurring loans that just eat away income of workers to far much complex instruments where a financial product is a commodity, gets traded in different forms, in different geographies. And when there's a crisis here, they don't solve it. They move to a different location and let you and me suffer that period of crisis. And then they make money in a different geographical space. That crisis follow them because perpetually there's the inherent character of crisis in capitalism. So that's the financialization we're talking about. Of course, in the discussion document, what we do is that we don't bring the theoretical debate and the conceptualization. We just talk about when you replace manufacturing with banks, then you are financializing your society. And there are implications to that. It means you won't create jobs.
Yeah. Duma?
Yeah, okay, the short version. I'm not, the people who do this thing, people like Siraj Mohammed, But anyway, but the thing is, to me, just to make it, I was trying to think, how can I make this thing easier to digest?
Yeah.
So our economy over 30 years hasn't grown. GDP per capita, 22%.
Yeah.
But finance, as you say in the document, was 11%. Now it's 24%. It's the largest sector of the economy.
Yeah.
So now, in this economy that doesn't grow, finance is growing faster than anything else because they're encroaching into everything. So now I saw it in the discussion document. So so I don't know. So there's certain things that we must protect from financialization, encroachment. Number one is education. We must take profit out of education.
Yeah.
Number two, just commenting on the discussion document, you say how we will fund free tertiary. I don't think you need to say how you'll fund it. I've did the numbers before, and it's not a lot of money. I would not even go there. That's number one.
Yeah.
Number two, health. We must take profit out of health.
Yeah.
Because when you look at, I've been debating this whole issue of national health insurance.
Yeah.
It's a different form of financial. So even like NSFAS and all these loan things, like the missing middle. So back to education, tertiary, the missing middle. I looked into that thing. It can't work. You're finding a private sector solution to the missing middle. And so I agree with the EFF. We must write off those debts. We must come onto the state balance sheet.
Yeah.
As simple as that. You don't have to explain how it's going to happen. When I did the numbers at the time, I spoke to Ahmed Bawa. It was about 15 billion rands. So it must come off the bank balance sheet, and the state must take it over. That's basically it. Yeah. So they must. And if you look at tertiary education, NSFAS, I think, provides funding for about almost 60% of undergrad and 4%, and the national, what's it called? The National Research Foundation, 5% of tertiary, postgrad. So those things probably should be merged, and I don't even know how it must work, but we must take finance out of education. The whole point of education is not about financialization of education. The same with health. Now you look at these medical aids, only 16% of people are on medical aids and 84% is state, So now if you unpack it, of the medical aids, you said I mustn't talk about numbers, only 22% have got full comprehensive cover. So medical aids, so of the 16% of the population that has medical aids, the majority of them, 78%, can't afford full cover. They have to pay out of pocket when they run out. So so what I'm trying to say is that only 3% of the population has comprehensive cover So what I'm trying to say is that the private sector cherry picks prime. It's designed to cherry pick prime customers, but the majority of people, they don't have their subprime, 80% plus of our population. That's number two, health. And then number three is, now they're trying to encroach on all the things that are publicly owned. Private infrastructure. Yeah, I'm very glad that you took that thing out of your manifesto into this one. I read these things,
Yeah.
And
Good.
I even wrote, and I complained to someone who I won't mention, build, operate, transfer, fiscally neutral. Those terms do not belong in an organization that calls itself a socialist, finalist organization.
Why?
Because the state must fund it. When you're saying build, operate, transfer, you're financializing it, and it is more expensive in the long run. It's not a free lunch. They will never. So they're there to cream profits. Do you see what I'm saying? And they would never do it without creaming profits. Now you see. Now the third thing, sorry, that we must take profit out of, and you do say so in your thing, is electricity.
Yeah.
I don't agree with the IPPs. I agree with the EFF on the IPPs. I would buy them back. In the UK, conservative Keir Starmer is renationalizing rail. Just a very conservative guy. He denies the genocide. So, but anyway, but I'm just saying that this thing had become so untenable. So now we've got this thing called structural reforms.
Yeah.
So it's energy, electricity, transport, the transnets you're talking about, logistics, and water. Yeah. So those things must stay under state ownership.
Yes.
And when we're talking about so just the last one before I go to the next one is that it's getting me a bit too excited. So we must get private sector out of electricity. Now back to Eskom. These electricity bills are unaffordable for even middle-class households.
Yeah.
So what we need to do, we need to have state provision, as you say. If there's going to be renewable energy, there must be a unit within Eskom that's going to do that renewable energy. And we must also subsidize households for these unaffordable things. So the free basic electricity must go up from where it is. I think it's 50 kilowatt hours, and it must go up to civil society is talking about 350. It must go up to where it is now, and there must be increased access to free basic electricity. And NERSA, so the government must subsidize these electricity bills. NERSA is asking for, was it 30%? So whatever not NERSA, ESCOM is asking for 30%.
Yeah.
Whatever the NERSA determination is, and the 4.5%, the government has to pay for it. So this is the cost of privatization.
Yes.
Everything becomes unaffordable. Yeah. So that's the one. And then the last thing I want to say is that, so this thing's growing, feeding upon itself, making profits on itself. We now have 20 trillion rands of assets on the JSE. And we've got 20 trillion rands, non-bank financial assets, it's about 7 trillion rands. I mean, banks is about 7 trillion. Non-bank financial assets is about 14 trillion. That's your retirement funds and those type of things. So we've got 21 trillion sitting there, and investment is 14% of GDP. That is very low. The target in the NDP is 30%. They're not investing in the economy.
Yeah.
So we have to find a way. How can I put it? So I would say, let's start with the banks. A developmental state has to have state influence and control of the banks. If you go to China, he's been there. Control of the banks is another tool of macroeconomic policy. So they've got something called central huijin. They own, the Chinese model was collapsing in the beginning of the century because of what they call policy lending to support, government lending. And then there was a bailout, what we call bailout in South Africa, of their banks. So they restructured the industry. There was a $500 billion bailout of the banks. And what happened is that because the Reserve Bank, Yakona, People's Bank of China, is not allowed to own shares in banks, they created an intermediary called Central Huijin to take stakes in these companies. So this is how they exercise control. So after the global financial crisis, you have the biggest infrastructure boom in, I would say, the 20th century history. In China. Yeah. If you go to anyone who went to China in 2009 and goes to China like I did just before the start of the pandemic and I came back sick, these are two separate countries. I was patient one.
We were possibly patient zero.
I was patient zero, yeah. But we didn't know what it was. But the point, what I'm trying to say, what I'm trying to say is that the banks financed it, so it's an additional tool. So we have to get a seat in the table. The PIC is one of the biggest shareholders there in Standard Bank, together with the Chinese. So we have to find a way of owning these banks. Now, the last one I'll say about the banks, man, when you look at black SMME finance, that one just makes me want to weep, So the total balance sheet exposure in 2019, they stopped because I started writing about this, was 21 billion rands. That is not annual lending. That is the total exposure. It was 0.3% of their assets. So what we're talking about is not risk profiling of small businesses, which exists in every single country. We're talking about racism.
Yeah.
So I do think there's time now for us to take control of the financial sector in different ways.
Yeah.
We should have developmental lending targets, as you have in China. When I was there, Chinese economy, it's mostly large businesses that own it, state-owned companies, and the small enterprises feel squeezed. So the People's Bank of China started a facility whereby the banks were to lend to small businesses. So I do think we need developmental quotas for black SMMEs, and then we also need developmental targets for non-bank financial institutions. This is your old mutuals and your Sanlams, the ones that own the other 14 billion. So we need to have more control of what's happening in finance, and because it provides an additional tool of development spending, but we mustn't allow them to be able to financialize everything. So we must say that this is what you can do, this is what you can't do. So I was talking about what we can do in terms of must stay state-owned. There are areas where we can say, and let's talk about the central bank, quickly, is that the central bank can, let's say, mass housing, transport, the taxes. I believe strongly we must we must, just like we're talking about the miners, we must regularize the taxi industry. Now, the problem you have is the financialization of taxes. Transaction capital, I went to the what you call it, the funder of taxes, 27% up. That is
transaction capital is the company that borrows money when you want to buy.
When you want to
buy
Toyota
taxi. Yeah, they're the
taxis,
market leader. So I'm saying the state bank, it must have a mandate to provide cheap funding for housing, for taxis. So the Reserve Bank can capitalize it with a developmental window. So we know we've got this view in South Africa that the central bank is just there to set interest rate. The central bank can do much more. We can have developmental windows. What is to prevent them from saying we have a developmental window of 4% for taxes and low-cost housing, and then you can put 2%. Now, what does that do to and then I believe that the state could take over housing of below R1 million. So what does that do to it? Changes the low-cost housing. Something less than R1 million, the state could take it over. So the state bank could take it over, and they could put a margin. And then what does that do to a R1 million loan or 500,000 loan? It reduces the price of that loan big time. And the same with the taxes. And then you see the taxes. I used to work at the Department of Transport. As you know, most of the subsidies go to a few bus companies. It's billions of rands and to Gautrain. And then once you regularize the taxi industry, you provide them with a subsidy. But they must regularize. Do you see what I'm saying? You can't do it with this chaotic industry now. So do you see what I'm saying? So they must. And I remember when I was at the Department of Transport, there was some example in South America where they recap by law the taxes every X years. I can't remember. It was about 6 years. You have to buy a new taxi. So I'm just saying. So those are the things that we can do with the Reserve Bank. And then last thing on the Reserve Bank, I don't understand why South Africans find this one difficult to understand. I did the presentation that, for Parliament during the debate. So the short version of it. So when I looked at this thing, the shares of the Reserve Bank, there's, I was not allowed to bring my notebook because I've got details. But what I'm trying to say, if you look at it, this thing, it's 16 million rands, the shares. So what is the difficulty of making an offer to buy this Reserve Bank and nationalize it? People come with all sorts of reasons, and the reasons for not nationalizing do not make sense. The market might react. Kanjani.
The market
because
dictates everything.
It's none of their business. If you make an offer, I know the EFF would say without compensation, but I'm just saying that I work in the mainstream debate, so I say.
So compensation is part of the mainstream debate.
No, I'm just saying that the people I talk to are they understand this language. So it's like it doesn't mean we disagree with each other. It's just that we're operating in different spaces. So I'm just saying. So if you make an offer of 16 million rand, what is the difficulty with that? And then the second thing, we must change this mandate of the Reserve Bank and the Treasury and I want targets. So to solve this unemployment crisis, I've done a lot of work on this. To cut a long story short, there's 12.2 million unemployed people in South Africa right now. The unemployment rate is 41.9%, third quarter. And then number two, there's 1.1 million unemployed people with tertiary qualifications. I get that. It's not part of the official result. I get additional information from Stats SA. So it's 1.1 trillion. So we must get away from our heads that this is a skills mismatch. It's a fallacy. And then number two, generally, there's a relationship between GDP growth and job creation. So I've sliced the data for the past 30 years. 1% results in 0.9% increase in employment. So if GDP is 0.1%, roughly employment will increase by 0.9%. So we need to create GDP growth of 4% just to create the annual new entrants into the labor market. According to my modeling, it's 740,000 every year until 2035. So we need to create, so the Reserve Bank can't be independent of national goals. That is completely absurd, So the Reserve Bank must have a dual mandate to create jobs and to grow the economy. And the same must apply to Treasury. And the reason I say that, you've got the National Development Plan. It's got a target to create 11 million jobs by 2030 and
In
GDP
practical
growth
now.
of 5.4% a year. But those two institutions, the two most important institutions in the country, do not have a mandate to create jobs. Nobody is responsible. I heard someone was, I think the Youth League, ANC Youth League, saying that the employment and labor, that's not the Department of Employment and Labor. They don't have the macroeconomic policy tools to address this unemployment crisis. So that's what I'm trying to say, is that so we must have the Reserve Bank dual mandate like the US.
Yeah.
And then the same with Treasury. And how they're going to do it is their problem. So I'm just saying that, so what the Reserve Bank can do, they can also intervene in our bond market. So we've got this bond market. It's about 4 trillion rands. Government issues bonds. So what happens in countries like Australia, like Japan, and it's happened in the US after the war, they intervene and they set the price of capital for government. So now it's called quantitative easing. So they buy government bonds. So what I'm trying to say, they can reduce the cost of borrowing. They can finance development finance institutions. They can finance government. And the last thing I want to say, I read the discussion document, and I'm glad you're talking about the PIC. That one just drives me crazy. And if I had to, like just quickly, because we're getting towards the end, if I had to comment on where you end it, that's where you should start it. Because I think where you end that discussion document, that's where you should start it, is that you're saying you reject, and I agree with the things you reject, but you have to provide South Africans with a positive message as to how we get out of this thing. And that positive message, you start with it, and that is where I had to wait until the end of the discussion document where I saw the positive, the positive, and how you're going to do it. So the PIC, so last thing is that we've got this, so we've got the central bank that can finance development. The central bank can influence the allocation of capital by the banks. It can become a, they give the licenses to trade. So they can make them a condition for licenses to trade developmental targets for black SMMEs, for industrial policy, for whatever. And because we can't have the situation, that's number two. And then, so the central bank can do so many other things other than, they can finance development, finance institutions. And the PIC, we've got this SA Inc. balance sheet that I talk about. So the SA Inc. balance sheet is 4 trillion. The PIC's got assets of 2.8 trillion. We've got foreign exchange reserves of 1.2 trillion. And we've got cash of about 150 billion. So we're talking about 4.2 trillion, this balance sheet. Now, the PIC assets, let's start there. They've accumulated surpluses over the past 11 years until 2023 of 600 billion rands. 50 billion rands plus a year that they've accumulated. Number two, the assets are 400 billion rands above the target of 90% that's set by the trustees. I don't have time to go into the technical details, but there's excess money in that PIC. And I've done a scenario where we cut the assets of the PIC by 50% and release half of the money into the economy, and you can still continue to pay the pensions. I was in the government in the, the pay talks with the unions, and was it a couple of years ago during COVID, And, some of them, they listen to me, some of them they don't. But that's what I'm trying to say. So we have this balance sheet and the PIC. People don't know government debt to the PIC is 800 billion. It's about 500 billion from the government. It's about 5. They don't break it down, but I assume it's about 550 from the government and 250 for whatever. 250 for state-owned companies. So there's so much that we can do. When someone says, how are we going to pay for it? There's the central bank, there's the PIC, there's this foreign exchange reserves. In fact, for the foreign exchange reserves, we can use it to settle the debt of Eskom, the foreign debt of Eskom, and the foreign debt of Transnet. Transnet and Eskom, I believe, need a clean balance sheet to start from scratch so that they can be able, if you look at public investment, a big portion of it is state-owned companies. So if the state-owned companies, they can be able to, invest in our economy. It's because the thing we haven't talked about is this investment that we have, the public sector investment strike that I talk about. So I'm just saying that, so finance, so the central bank is very important, and people just believe that it's people are intimidated by this central bank, because people forget the 2024 budget, they created 150 billion rands for treasury. They didn't touch the reserves, they created the money. So the state can't run out of the currency that it issues.
Yeah.
It's not
But
possible.
we can have
possible.
institutional mechanisms to control the ability to create money.
Yeah.
But that's beyond my pay grade. But yeah. Sorry.
No, it's interesting because we had irritated the governor of the Reserve Bank very recently on this discussion because they seem to really rely on the fact that the Reserve Bank's primary mandate is inflation targeting.
And I just want to say about
all sorts
the inflation targeting. So now you can respond to what I call supply side shocks, which is like, so basically since inflation targeting was introduced, interest rates are supposed to be used to when people are spending too much money.
Yeah.
But since inflation targeting, they have put, it's three things. It's food prices, the exchange rate, and oil prices. So every single interest rate increase of the past since inflation targeting is a response to that. But the textbook response is that you're supposed to allow the first round. You must, like when the oil price goes up, you must, and it affects prices, you must do nothing. And that's called the first round effect. But you must only, this is the textbook, the mainstream, but you must only do something during the second round if it has knock-on effects. But I would remember reading all monetary policy statements, speeches by Kganyago from the time that he was appointed to the time that, to 2019, before the pandemic. And they say the currency has gone down, but there are no pass-through, but they increase interest rates anyway. Do you see what I'm saying? So what I'm trying to say is that even the conduct of monetary policy, to me, it makes no sense. There's no reason.
It's very suspicious.
There's no reason why we shouldn't have much lower interest rates at the moment because inflation is at, where's it, 3.8%?
Yeah.
And inflation, in fact, a lot of the forecasts that people forget this, that we made about inflation coming up and down, it had nothing to do with people spending too much because there's huge spare capacity in our economy. There's no reason why we can't have lower interest rate. So the central bank can do so many other things than just setting interest rates. So maybe I don't know, in the discussion document you can mention, without going into too much detail, some of the other things that the Reserve Bank can do.
Definitely. I think something else I want to touch on to close on the financialization aspect, because I think it goes hand in hand with, because as you were saying, the finance sector is continuing to grow while all other sectors are on a decline. The economy is like on a sluggish trajectory in terms of growth as well.
Yeah.
And the response to this sluggish economic growth that we've seen has been austerity, has been calls and reliance on foreign direct investment. What do you think about that as intervention to what's occurring right now? Because the most recent midterm budget policy statement has placed a heavy reliance on public-private partnerships. They've placed a heavy reliance on the need for investment in order to grow the economy. But is this misguided? And of course, I think this can also be a segue into a conversation around the fiscal framework as well, of how do we sort of plan our economy in terms of service delivery. I know we were having a debate about how municipalities get about 9% of the allocation of the budget. And it's based on outdated census data as well. So the entire financial planning process is based on expired data on who's the poor and how many people there are in society. So perhaps let's have a conversation on the response currently by government, by treasury to slow economic growth. Is austerity, emphasis on foreign direct investment, emphasis on privatization and public-private partnerships, and of course encroachment on public services such as Transnet, such as the railway infrastructure and all sorts of nature. Is this response appropriate? Is it misguided? And what ought to be the appropriate mechanisms to respond?
But maybe if you allow me, just before I get into that, there's like one important point about the absence of clear mandate of creating jobs. So it's correct. The Department of Labor, Employment and Labor, I don't know why they call it Employment and Labor, but it's not its job. It doesn't have a mandate to create jobs. The mandate to create jobs must stem from the fiscal and monetary policy. It must be clear, if we are spending so much money, right, for every rand that we spend, we must be creating this number of jobs. So that function sits squarely on the budget. So if we table our budget and we don't say, based on this budget and all these things that we are going to spend, the target is this number of jobs, then it means that no one has that mandate clearly. That's the first point that I want to touch on, right? But also, and just to make it plain, that the treasury has no regard for job creation.
Yeah.
They have no regard.
Yeah.
So they're implementing this wild reform. They call it Operation Vulindlela.
Yeah.
And I argue that once you start using words like operation, you are running intelligence.
Yeah.
Right?
Yeah.
Now they are running intelligence to open the way, and they're opening the way for profit making.
Yeah.
So the encroachment of the financial sector I was speaking about now is starting to go into water. It's going to go into waste treatment plants. And before you know it, there's not going to be a single area of public service, including defense, where there's no private sector.
Yeah, Dinel already.
Right? Dinel already is gone. Now, you can't have such a wide-scale reform and then you say you'll create 1 million jobs every year for the next 10 years. You can't. And that is contained in the review, the first review of Operation Vulindlela. That is the anchoring policy of this administration now, Operation Vulindlela. So if you are going to create 1 million jobs every year, it just told us now that there was going to be plus minus 700,000 people entering the labor market every year. So you create jobs for the 300,000 that is entering, you leave there 400,000, right? And then you still have the 11 million that is sitting there as a backlog. So you will never deal with the problem of unemployment. I just thought let's contextualize this.
Important.
They need to have a mandate. Now, coming to the Reserve Bank quickly because it touches on where we are today. When you look at the Reserve Bank, and I always tell people that the discussion about ownership and the mandate are not separate conversations. Because you can't call an institution that issues shares and then those shares are bought by a private individual and then you call it a state organ.
Yeah.
Because if you do that, you are calling it a state organ because of a function, right? So circulation of money is a state function, right? That's why we talk about a rent issuing state. You will never run out of money. But the complication is that once you issue shares, it's implied that those people are entitled to that institution. It's their institution. You may appoint the governor, you may appoint 5 directors of the board, but at the end of the day, there are shareholders sitting in Germany, in Belgium. They don't publish that list anymore. They've stopped since 2018 because we can't stop talking about it. Right? But the most progressive thing that I've seen lately around that conversation is that parliamentary budget office. The EFF doesn't have a majority in parliament, so we can't easily nationalize this institution. If we had our way and we had the numbers, we'll nationalize it. But the parliamentary budget office is 21 million. And then you're done with this conversation.
It's finished.
Right. But today, when you talk about the discussion document, Duma, you say we end where we should start, right? It's very difficult because it's almost like a ritual. These documents, they don't have a single author. So you can't walk out of here and claim that I drafted this document, I've conceptualized it. No. What we do as a drafting committee, manifestos 2016, I was involved, 2021, you go and listen to submissions.
Yeah.
That's what you do.
Don't conceptualize them in your bedroom.
No, sorry. I'm theoretical.
No, I get it. I get it,
yeah.
but I'm just making a point that the discussion document is not an academic conceptualization of a position.
Okay.
Right? Yeah. So you don't do that. What do you do?
No, we're coming from different places.
Yeah, I get it. That's why I'm explaining. So you go and sit with security guards, right? Like 500 of them. And then the president will sit there in that session. And this is the official chairing, right? He has convened it. One by one, they tell you
what's going on.
And then when you're finished, you go and speak to domestic workers. And then you go speak to the financial sector. And then you come back to, as a drafting committee, and say, okay, these are the submissions that we've received in these consultative meetings. This is the framework, the founding manifesto. And then you try and merge the two to then arrive at what becomes a discussion document for the third NPA. That's why we call it organic development over time, right? So to then go and try that, it's not possible to sit and conceptualize a whole document. So how it starts and how it ends there's like the communist tradition of writing documents in it, which is very historical. If you have looked at the first Communist International and the second, if you look at the Russian Revolution and all the documentation that has come, the offspring of socialist parties all over the world, there's sort of like a style of writing, and we can all obviously adapt it, and bring it home if we think we need a positive message at the beginning, so that we make you read the whole document, and then you're able to link the proposed solutions and how we diagnose it, right? But coming to Kommissar Snao's question, and as maybe on my side concluding, as you've indicated, so the fiscal policy, it's an instrument of development.
Yeah.
At its core, when you talk about the minister is tabling a budget, you are tabling an instrument of how you are going to do development. You are not tabling an instrument that will have to send signals to the markets to say, if you bring your money here, then you'll get the return. That's not what it serves. The purpose of a fiscal policy, at its core, is a development instrument. How you are going to provide health, education, water, sanitation, right? Now, the current situation where we call for investment every day, the investment strike is talking about, is because the state is being reduced to a regulatory player in the economy. So there's an ideological underpinning to austerity measures that are being implemented.
Yeah.
So when we're told that the state is too big, we must cut on the state is inefficient, ESCOM doesn't work properly, we must invite private sector, as if they have some special God-ordained knowledge that we don't have in the public. But if a political party that is ruling decide that it does not want the state as an instrument, the natural progression of its stay in power, it's well defined. It's going to lose power, which is what is happening to the current governing party. So they're not losing power because someone has offered a better message that is well understood by the electorate, right? Because if that was the case, everyone was going to be voting for the EFF.
Yeah.
They're losing power because they've decided to give away the one developmental instrument in the form of the fiscal policy, in the form of the budget which we table, 2.4 trillion. If you are spending 2.4 trillion every year, you ought to say, this is the kind of returns we want. Currently, you can't. You keep spending money, but everything keeps getting worse.
Yeah.
Municipalities are collapsing, right? So that's how we need to understand the current framing. And when we propose in the discussion document that at the center of the economy, it's state-led industrialization, what we're trying to put forward is that the Reserve Bank monetary policy must serve that purpose of state-led industrialization. Because there are certain industries that the private sector, like he said, they pick where the return on investment is quick, it's less risky, and they will get it and be able to export the profits out of the country. But if you are going to eradicate the road backlog and tar the 460 kilometer of gravel road, you need someone who's committed to the development of this country. If you are going to eradicate the housing backlog of more than 300 million people who said they want houses, you need someone who's willing to say every home that costs less than $1 million, it must be financed differently.
That's what I think, yeah.
That's what he's saying. So you don't have to go to Standard Bank and get an interest rate of 15%. No, it can even be interest-free. Right? So over and above a state-owned bank, you still need to control these other existing banks. Right? So that's why you can't formulate a state-owned bank to match Standard Bank and FNB and Capitec as they are in their current form. That will be a waste of time and money. Right? So the current formulation of the fiscal policy, it's one that ideologically driven by the National Treasury.
Yeah.
It seeks to pull back the state into a small corner and then allow private sector, unashamedly, by the way, because in this Operation Volunteer document, one of the questions that we asked through the TG in Parliament, she asked, when you say you are doing this Operation Volunteer, which state-owned companies do you want to privatize? And guess what was the answer? We are not going to privatize any state-owned company. We are just going to promote the participation of the private sector. And that tells you what is wrong with that fiscal policy and the current framing of economic policy, both at fiscal and monetary policy in South Africa. And the discussion document, based on many inputs and experience, 11 years now, That's why we've centered it around state-led industrialization.
Yeah.
The state must produce certain things. And once you put those things in order, then you can go and even be supportive to the private sector. It says, no, if you are producing innovative electronics, the state will put an off-take agreement, will buy 7,000 tablets for the next generation of grade R learners that are going to start in the next 2 years. Just produce them, but produce them here, employ so many people, pay them these wages, and then we're good. So even when you open your factory, you know that you already have a buyer, one of the biggest buyers in the economy, right? So the characterization of this discussion document coming from the second NPA, it's centering the state at the core of what will re-industrialize South Africa. And then maybe the last point, when we talk about financing, so how do we finance this? Is absolutely correct. There's so much money. You know, the PIC, one of the fundamentals of actuarial science, and in calculating the risk exposure, how much invest, there's never going to be a time where all these government employees come to you and say, we're resigning.
And withdraw at the same time.
It's not going to happen.
I presented to the SACP and
I got it from you when we were in Parliament on how we can fund free education.
Yes.
It's never going to be a time where you have 1.8 million public servants saying, okay, today I'm resigning.
So you don't need fully funded.
You don't need full funding of the PIC. You know,
just one thing, I know we're closing, is that because I must forget, you talked about state-led industrialization. There's one part that I did like at the beginning.
Yeah.
You said the economy is at the center of everything we are trying to achieve.
Yeah.
So I think that is powerful, and that's every South African, because we focus on too much the politics.
No, it's not the GNU and who's the minister.
And
if we're getting in there,
the economy. We must discuss economy, because when you go to you must be able to talk economy all the time. And that's what I liked about in fact, I said that's what I liked about what you're saying.
The document, what it does.
Before state-led industrialization, talk about the economy is at the center of everything
we do.
So the economy, and last thing I want to say is that I want to talk about fiscal policy, said a lot. Is that I oppose this artificial separation between social and social policy and economic policy. It's one thing.
Yeah, you can't.
Because if you're doing education, that's part of the economy. You see what I'm saying? Health is part of the economy.
That's where you get labor.
That's
where you get healthy labor.
And then the life expectancy goes up because we're investing and we're doing health promotion, healthy lifestyles.
But that's why you get customers also for the private sector.
But even transport, when you talked about the taxi industry, no one talks about how Toyota has monopolized that sphere.
No.
In terms of taxis.
We're not producing our own taxis.
And we ask a question to Pakstow. Is there any plan to build a state car? Like, is this government?
Yes,
there's nothing like that.
Yeah, because they're now talking about new energy vehicles. And then if you see what China's doing in that thing, it's incredible. Why can't we get them to produce here, like a 50-50 joint venture? And we start with the taxes,
China will not say no, by the way. China works on the strength of your negotiation. That's what they say in the relationship with Africa. But just to conclude on that point, right? So you will never have a situation where everyone says, hey, I'm resigning and therefore I want to cash my pension.
No,
so the PIC, it's a serious instrument that is just idling there and we're not maximally exploiting it, because they think if they do that, then they will lessen the money in the gambling stock exchange in Johannesburg, which is not going to happen, right? But why we say the economy is at the center of everything, we ought to protect that identity. Right? So we must not get confused along the way and start thinking, no, maybe we'll come to the economy. No. At every turn, we must say, okay, how does this reshape the economy? And that's how you get answers, proper answers, on many of these engagements which we do, local government governing arrangements in Johannesburg, Ekurhuleni, and so forth. And then the last point, once you have a state-led industrialization with off-take agreements for the private sector in other sectors where the state may not necessarily have interest, right? I like this concept of a development window. We may have to think about it much more substantially, going forward. To say, this thing that sounds ridiculous and they may threaten the market, let's call them development window, because we need that. We need to deal with the unemployment, the high racialized inequality, and other social problems, and the backlog of infrastructure which we have. Because that is not part of the dialogue. We think we are going to ask investors to come and put money here and solve our problems.
Yeah.
It's not going to happen.
Yeah.
Right? Those guys, they tell you, by the way, that I don't think I'll get my money here when I want it. And by the way, when I want it, it means every time something looks like it's going down,
I want it.
they pull out before it gets worse.
Yeah.
And then they're willing to wait and come back later on when things have stabilized. We don't need that to deal with such levels of structural problems and decades of this colonization and apartheid and what it did in terms of damage to society.
Gentlemen, I think
you
let's
so
close
much,
it
yeah.
there.
Thank you
Yeah,
so
we
much.
don't want to talk too much and leave our delegates with nothing to
We must
to
still go there
reflect
in
on.
commission.
Yeah, so you're welcome to join us. I think we must make means for him to be a guest.
I think we must request PSG to
Absolutely,
do that.
absolutely.
Yeah, I agree.
So they can form part of our discussions.
Yeah.
Thank you once again.
Critique us in front of the delegates.
Yeah, so that the delegates don't ask us when we leave here. You guys miss certain things. But thank you very much, Comrade Duma. Thank you, Dr. Gumani. And thank you all for watching. That's the end of this segment of the EFF special podcast. Let's all engage with the discussion documents and ensure that we maximally apply ourselves as delegates who will be going to the conference, but as society in general. Let's interact with the ideas of the EFF and how we seek to transform our economy for the betterment of our people. Thank you very much.